Last year, Asian stocks outperformed most other global markets, including the United States, but that's not the case this year. The MSCI Emerging Markets Asia Index is down 1% this year compared to a 22% rise last year and a 1% gain in the S&P 500 index so far this year. Joining us now with his outlook for emerging market stocks in Asia and really beyond is Ajay Kapur. He's head of Asian equity strategist over at Deutsche Bank. He's based in Hong Kong, but he joins us here in studio. Ajay, good to have you back here in New York.
Thanks, Carol.
We are trying to kind of get an understanding of what's going on in the emerging markets, emerging market Asia. We look at China, and they are taking steps to slow everything down. What's your evaluation of what's going on right now?
Well, I think in the short term, in the next few months, I think equity should be fine wherever in the world. We were just talking about this earlier, where sentiment is now a little bit panicked, a little bit subdued. At the same time, the economic surprises have been quite bad. So a lot of this, what we're feeling, is already in the price. So I think the next few months look fine to us. We're buying more cyclically oriented stocks compared to defensives.
Around the globe or Asia specifically?
Mainly in Asia, so semiconductors, basic materials, capital goods, that kind of stuff. But this is more of a risk-on, risk-off story. In the longer term, next 2 or 3 years, Deutsche Bank has a slightly contrarian opinion, where we think that emerging markets and Asian equity markets are likely to underperform or find it very challenging the developed markets.
So developed markets will be the better play then?
Yes, as this year. So, the average U.S. stock, the median U.S. stock is up 5% this year, even including last Friday's sell-off. The average emerging market stock is down between 5 to 15% this year. So the indices hide a lot of bad information. So we think this is probably going to continue for longer than people think.
Ajay, I'm sure that Carol probably has the same question as I do. If the emerging markets are going to go through that kind of weakness, then where do we get in developed markets our strength from? Because we're already counting on emerging markets to fuel our revenue growth here.
Well, it's fascinating that the U.S. companies actually tend to make a lot more revenue and higher profit margins in Europe, surprise, surprise, than they do in emerging markets. So I think that, my colleague Binky Chadha is very bullish on U.S. equities. And the idea is what Binky's thinking and other colleagues are thinking for developed equities is that because there's been underinvestment in the West, because there was a great recession 2 or 3 years ago, the increase in margins is more a function of just being a lot fitter now, 3 or 4 years after the crisis, and absolutely very little bargaining power for wages. And so I think capitalists are in reasonably good shape.
What do you think about Nouriel Roubini? He talks about a perfect storm threatening the global economy, and he talks specifically about the fiscal woes here in the United States, the slowdown in China. He talks about the stagnation in Japan, and he also talks about the European debt restructuring. One of those alone is enough for us all to deal with as investors. Put it all together, and that's where we are right now. That's a really, really full plate. How can you guys over at Deutsche Bank find your enthusiasm?
Well, we could have said all of those 4 bullet points back in January. And as I said, the average U.S. stock is up 5%. The average European stock, despite the sell-off, is up between 0 to 4%. So despite all this information is well known, there's nothing new there. And so my point is that the developed country equities actually are quite resilient, given all this package of bad information.
And even if the bad information continues for the next 6 months or whatever?
Yeah, I think that, if it gets worse, then we do have central banks that are not asleep at the switch, and you'll probably get some sort of a policy response like you got last August with QE2. That's not our house view. And we at Deutsche Bank, our economists, believe that the world economy is actually reasonably resilient. It's just going through a soft patch. Yeah. So
got a few seconds left here. So your favorite plays right now? I know we talked about a little bit about Asia.
Yeah. Well, within an Asian context, we upgraded Chinese equities about a month ago. And again, there's a lot of bad news in China on stagflation and corporate governance issues. We think it's in the price. We think that inflation is going to peak out very soon. There's no hard landing. And so this is a good time to pick up some Chinese equities. We also like some of the smaller markets like the Philippines, Thailand, and we're not big fans of India and Taiwan.
All right, going to leave it on that note. Ajay, thank you. Good to get some time as you swing by New York. We appreciate it.
Thanks, Carol.
Ajay Kapur, he's the head of Asian equity strategy over at Deutsche Bank.